The American dream of owning a home is feeling more and more like a mathematical impossibility for a huge number of people. It's not just a feeling, the numbers back it up. Since 1985, the median US home price has skyrocketed by 403%, from about $82,800 to nearly $417,000. In that same time, the median household income has only grown by 252%, from around $23,620 to $83,150. The result? A median priced home now costs 5 times the median annual income, creating a massive affordability gap. For so many people, this isn't just a statistic, it's a financial prison. These are people who did everything they were supposed to do. They saved their money, they built up their credit, but now they're completely locked out. They're staring down prices and mortgage rates that have twisted their dream into a nightmare. In this video, we're going to expose how the housing market became this trap for buyers, and more importantly, how you might find the keys to escape. So how did we get here? The trap has two massive jaws. The first is stubbornly high mortgage rates. After years of historic lows, rates have hovered in a punishing range, and forecasts only show them easing slightly through 2025. That directly translates to higher, often unaffordable monthly payments. But it's the second jaw of the trap that has really slammed shut on the market: the lock-in effect. A huge number of current homeowners, over half of them, are sitting on mortgages with rates below 4%. They are, quite understandably, not willing to sell their homes just to buy another at a much higher rate. This has created a golden handcuffs scenario. It's frozen a massive portion of the housing supply and created a deep divide between the housing haves and have-nots. This isn't just a normal market cycle, it's a structural problem where existing owners are locked in and potential buyers are locked out. For anyone trying to buy a house right now, the result is a mess of frustration and confusion. We keep hearing that inventory is rising, which should mean more options and more power for buyers. And nationally, the number of homes for sale has increased, but that growth is slowing down, and in many places, the number of available homes is still way below what it was before the pandemic. This keeps competition fierce and prices from falling. This whole dynamic is absolutely crushing the next generation of buyers. The median age for a first-time homebuyer has now hit 36. For those under 35, the home ownership rate has dropped significantly since the pandemic began. To make it all feel even more confusing, in some of the hottest pandemic markets in the Sun Belt, rents have actually been falling, making the leap to home ownership seem even riskier. But that's not the case everywhere, with rents nationally still ticking up. It feels like the rules of the game have been permanently rewritten, leaving millions of people wondering if they'll ever get a chance to play. If this frustration sounds painfully familiar, and if you feel like you're caught in this exact trap, make sure you subscribe. We're not just here to point out the problems. We're here to find a way out. Escaping this housing trap doesn't mean you have to sit around and wait for a market crash that most experts say isn't coming. It means you need a new strategy. The key is understanding that we are no longer in one single national housing market. We are in a patchwork of fiercely regional markets. Your escape route starts with knowing the difference. The very markets that boomed during the pandemic, places in the Sun Belt like in Texas and Florida, are now seeing huge increases in the number of homes for sale. Some areas are seeing inventory levels 30% or more above 2019 levels. This is finally starting to cool prices and giving buyers real negotiating power. Meanwhile, markets in the Midwest and parts of the Northeast are much more stable and affordable. These regions didn't have the same insane price surges, and now they offer steadier markets and a lower cost of entry. Your power as a buyer completely depends on which of these markets you're in. With that in mind, here's a playbook for this new reality. First, Stress test your finances. Don't just budget for the mortgage rate you're quoted today. Run the numbers on what happens if rates go up another 2%. Second, become a local detective. Track the days on market and inventory levels in your specific neighborhood, not the national headlines. In markets with rising inventory, you can, and you should, negotiate on price, repairs, and seller concessions. Finally, if you're in a hot, supply-starved market, do the math on the real cost of buying versus renting for the next 3 to 5 years. Sometimes, the smartest move is to wait and build a bigger down payment. The American dream of owning a home isn't dead, but it's definitely not a straight path anymore. It's become a financial labyrinth, a real trap for anyone who isn't prepared. High rates and the lock-in effect have created a brutal environment, but it's not impossible. By understanding the regional differences and using a disciplined, data-driven strategy, you can avoid the pitfalls and find a path to ownership that builds your wealth instead of turning into a financial disaster. The key to escaping isn't timing the market perfectly, it's knowing your market. So I have to ask, what does the market look like where you live? Are you seeing more homes for sale, or is it still a dog-eat-dog seller's market? Let me know in the comments below.